Welcome back to the channel Investor Canada, where we hope to explain and make investing simple. Now, if you're looking to invest and create wealth, one of the greatest ways to do so is investing in publicly traded companies and buying stocks. Now, this video is Stocks 101, a beginner's guide. But before we get started, if you haven't already, please subscribe to the channel for continued simple investing content. Alright, so let's get started. Our agenda today will be explaining what a stock is and where it comes from, understanding what determines the price of a stock and how you can buy one, understanding how you can make money from a stock and what to look for. So, firstly, what is a stock? A stock is a security that represents the ownership of part of a company, and it is a type of investment. When you purchase a company's stock, you are purchasing a small piece of that company, called a share. A stock represents an ownership share in a company. Thus, investors buy stocks in companies that they believe will go up in value over time. When you own a stock in a company, you are now considered a shareholder because you share the company's profits. Now that you understand what a stock is, let's explain how a company goes public, because not all companies have stock that can be traded publicly. For example, let's take a simple business, say your local coffee shop. That's a company. However, you can't buy shares because it is privately owned and not publicly traded. But let's say your local coffee shop is growing and growing, selling lots of coffee, and it ends up expanding, opening more and more shops. The coffee shop can then decide if they want to go public to raise money and fund for future growth. This gives anyone who wants the chance to invest in the coffee shop the opportunity to buy stocks or shares. This is called an initial public offering, or an IPO. Any publicly traded company has gone through the process of an IPO. Once the company has gone through their IPO, investors can now buy stocks, but it is important to understand that a company has a set amount of stock that are available in the economy. This is also known as outstanding shares. When you buy a stock or share, you aren't buying it directly from the company. You are actually buying it from another investor. Rarely do you buy a stock directly from the company unless it is during their IPO. Alright, so now that you understand what a stock is and how a company goes public, let's go over what determines the price of a stock. It's simple supply and demand. When a company is doing well and they are using the money from investors to grow, more buyers may see potential in the company and start buying the stock. As the demand for the stock increases, so does the price. This increases the cost for new buyers while raising the value of the stock that investors may already own. Additionally, the company's overall market value also rises. However, if for some reason a company is not doing well or seems to be less profitable, the reverse can happen. When the company isn't doing well, the demand for their shares decreases. Investors begin selling their stocks and the price of the stock falls. The supply and demand of stocks is constantly changing and is influenced by many factors. These are known as unavoidable market forces that influence companies. These market forces can include the company's cost of materials, new technology in the industry, the cost of labor. It can also include how investors feel toward a company's leadership team, any negative publicity, new government regulations or laws, or just a simple fact that investors want their money and want to sell their stock for personal interests. So every day, due to a wide variety of these forces, this is why you see fluctuations in the market. Now that you have a better understanding about stocks, how do you go about buying a stock? Firstly, you have to choose a broker. This can be a broker from a bank like TD, or nowadays you can find a broker online like Wealthsimple or Questrade. After you have chosen your broker, you have to open up an investment account within that brokerage. Some types of investment accounts include TFSAs, RSPs, RESPs, or a non-registered account. They all have different pros and cons, and we will discuss this in more detail in another video, but essentially, an investment account is just another bank account. You have the ability to deposit, withdraw, and transfer funds. After you have set up your investment account and deposited some funds, then you can go ahead and purchase stocks within that account. Now you're ready to purchase stocks, and you can purchase stocks from the stock market. Every day, investors trade stocks through the stock market on a variety of stock exchanges, such as the NASDAQ, which trades all the big technology companies, or the New York Stock Exchange, which holds the big American equities, or in Canada, we have the TSX, the Toronto Stock Exchange, which holds all the Canadian equities. Now that you know how to buy a stock, how can you make money? There are two main methods you can go about to make money. Firstly is through capital gains. For example, you can purchase a stock today for $10 and in a year it could be worth $20. You can sell the stock and earn a capital gain, subtracting any additional fees such as commission and conversions. Secondly, you can make money from stocks through dividends. A dividend is a sum of money paid regularly, typically quarterly, by a company to its shareholders, aka you, out of its profits. For example, let's take a bank. Say this bank earned $1 billion in profits. They can take a portion of that and pay it to you, the shareholder. And now let's say they pay a $3 dividend. This means that for every share that you own of the bank, you will earn a $3 dividend each year, regardless of how the share reacts on the market. This means the bank stock could stay relatively constant all year, but you still receive the $3 dividend. However, it is important to note that not all companies pay dividends, and those that do pay dividends, it is completely voluntary. The company has full control on how much they pay and can even cancel the dividend altogether. Now all this information is great, but how do you determine which stocks to buy? Now for everything you buy, whether it's a stock, a dog, or a car, you need to do your research. There are so many resources online to help you understand and research different businesses, so be sure to do your due diligence. But for beginners, a recommendation can be to stick to the multi-billion-dollar companies you see daily. These are called large cap stocks, also known as blue chip stocks. Now be sure to still understand that there is risk, and these stocks aren't immune to the market forces we discussed earlier. However, in general, they are more secure than no-name, smaller cap stocks. With blue chip stocks like Procter & Gamble, Johnson & Johnson, Microsoft, the Disney company, they all have proven track records, and you can access lots of historical data on these companies to do your own research and financial assessments. Additionally, there tends to be a lot more accessible information on these large cap stocks, where you can learn about the leadership, get press releases, even analyst recommendations as to if you should buy, hold, or sell your stocks, and assessments on how the stock may perform in the future. Another recommendation when deciding whether to buy a certain stock is to think about whether the company will be around in 10 years. Remember, you're investing in this company, so you should believe in it. You want to pick a company that will dominate in the future. Lastly, invest in companies that you know and understand. If you like a certain company or shop at a certain store, learn about that company and understand how it works, and then invest in it. That's what makes investing fun. You have the ability to pick companies that you like and believe in. Invest in companies that you're passionate about and that you use. This is the end of the video on stocks. Hopefully you learned something and got the basics about the stocks and stock market. If you like the information, please give this video a like and subscribe for more content. If you have any questions or feedback, please leave a comment below and I'll be happy to answer any questions. As always, thanks for watching and we'll see you soon.